JB Cycles with update on June the 23rd. This is my third video this weekend, summing up everything. I'm expecting this coming week or coming few weeks a 10-week oscillation low, probably a sideways consolidation, and then we have a new 10-week oscillation starting, and that could be actually the bull market high. So the first 5 weeks of a new 10-week oscillation should be in an uptrend. And if this 10-week oscillation starts a bit into June, then the next top could be around mid-August. We'll come back to that. Looking at the hourly data for the Dow Jones Industrial, we are at the top of a 2-week oscillation, and this could be the 10-week oscillation for Dow, an early low. If so, we should follow one of my 2 rally scenarios in green and blue. We should have continuation to the upside. However, this coming week could be sideways. But if we were to drop down, then I don't think we should crash down and break support, but it should be a bigger bottom formation. Looking at my primitive triangles, I have this triangle saying I should expect a low at this point where we had a higher low, and now we should rally. We should see momentum reach overbought levels. However, if this recent rally attempt fails, then we could have a small second triangle suggesting a low around the end of this next week. I've been looking at the VIX wavelets. So the VIX wavelet has not identified any top yet. We need another pop-up in the VIX to complete this top, and I have 2 projections from VIX for the S&P. So this one was generated down here, and it looks like we are in for some kind of a consolidation here. And the other projection, very similar, looks like we are in for some kind of a sideways consolidation here. You know, this second low could be a higher low. Looking at the S&P wavelets, I have this primitive tool, this rectangle, placing it at the purple wavelet top, and it's saying I should look for the 10-week oscillation low around this right end. So this is suggesting some kind of a sideways consolidation because time is running out for bears. We are well over halfway through this rectangle and nothing bearish has happened, so nothing bearish should happen this last bit. Let's see, we have my medium-term cycles. They have been suggesting weakness from March, April and into June, and we did see many sectors go sideways in this period, which was my expectation for the S&P. So we see this cycle composite is now bullish into end of July and possibly into August. Looking at each individual cycle, we see we are in the up phase of this 17-week cycle with a top around end of July, but the quarterly cycle is making a low this coming week and then going up, and the 10-week cycle is making a low this coming week and then going up. Also, I noticed that here I'm comparing this composite with the Dow Jones Industrial Average, and here we actually have a better correlation. So I think it's the tech sector that does not quite follow this cycle and is influencing the S&P. So here the Dow did show this sideways range-bound market, which I was expecting for the S&P. But now it's turning bullish. Let's see. I had a look at oil this weekend. So we have the 3.5-year cycle for oil, and it is suggesting we should see a bullish breakout into the winter. And zooming in, we see oil price is making a triangle, and comparing with the cycle in red, we see the cycle suggests we should start breaking up, and that's possibly what we have starting to see these recent weeks. And we should go up, and sometime this fall we should start to break up here. Let's see, I have here I had for a long time an expectation that this current bull market will be a ABC bull market, and here I have a wavelet in green. So these ABC bull markets, they are typically short bull markets of around 2 years, and we see many of them through history. These bull markets are not always perfectly aligned with the theoretical 3.5-year cycle. So I've been measuring all of these ABC bull markets from the we have A, B, C, and I'm measuring from the B low. So we see we had one after the 87 crash, A, B, C, and we had here at the tech bubble high, A, B, C, and after the financial crisis, an A, B, C, and actually the recent bull market also had a A, B, C with a top in early 22, and currently I'm assuming this is a ABC bull market, because we also have these long trending bull markets, but I think this will be a short ABC. And if my assumption is correct, then I compared all of these ABC bull markets. I made an average here, but then I narrowed it down, because all these bull markets, they have different positions relative to the theoretical cycle. And here I picked those ABC bull markets that are most similar to this current one. And actually, well, here I have them. And as you see, most of them are topping here in this period. Well, this red one early, here we have a top, here we have a top, and here, and there's a top. This one is more of a double top. And if I'm making an average of that group of analogs, we see we are actually following perfectly this average. And this average is suggesting a top around August the 17th. Also, we see how this is a very symmetrical ABC. This is the same length. So, yeah. But, yeah, very possible actually that we could complete an ABC bull market in August, but we could then have a topping formation into, say, January. Is very possible. If you look at some of these analogs, well, you see we could actually have a topping formation into the spring next year even. So it's too early to say the bull market is over. We first have to see some kind of weakness, something confirming the bearish scenario, but we should be starting to look out for weakness around August, in my opinion. So that's my main scenarios. There are other scenarios, one where we do not get a real consolidation here, we continue the uptrend and by making a topping formation that could give us an earlier top in July, but I'm currently looking at this as my primary scenario. So, see you!